Kitco Mining's special coverage of Resourcing Tomorrow is brought to you by Discovery Group.
Hello and welcome back to Kitco Mining here at Mines and Money in London. Today we're talking about gold and gold M&A specifically, and I'm joined by Peter Marrone, Executive Chair of Yamana Gold. Good morning, Peter.
Good to see you, Paul.
Good to see you as well, Peter. 2022 has been a landmark year from Yamana Gold, receiving not just one, but two takeout bids for the company. For someone that's perhaps more used to doing the buying, how has this year been for you?
It's wonderful to see that industry participants see the value in our company. If we look at our public disclosure, we've said that our board of directors provided a mandate to management going back to 2020 to look at how we can capitalize on the creation of value. Critical mass is important. Quality of assets is important, but critical mass has more of a bearing today than it has in the past, and creating value is not necessarily only what's in market, but from industry participants as well. And so it's a delight to see that several industry participants were prepared to look at our company and say, we can afford to pay more than what's in market.
Thank you, Peter. Now, Yamana Gold originally received a bid, I think around April, May from Gold Fields. Subsequently, a couple of months ago, you got an unsolicited bid from Pan American Silver and Agnico Eagle. How surprised were you that Yamana got an unsolicited bid when the Gold Fields process was quite advanced?
So I would say that in general terms, it is unique, perhaps, certainly not common, that when there is a consensual deal, someone else comes in effectively as an interloper. We entered into our agreement with Gold Fields at the end of May. And having said that, if we look at the public disclosure we've made, including in the circular relating to that deal, we go back quite a while in discussions with various parties. While we didn't identify the parties, I think it would be reasonable to assume that we had been in discussions with these two parties. And we had looked at what is the possibility of a structured deal very similar to what was presented. That would have been before we entered into the formal arrangements with Gold Fields. So at some point then, presumably, they came to the conclusion that they could offer something that is better than what was on offer, or at least more than what was on offer. And once that happens, we do, as a company, have to seriously consider it.
Okay. Were you surprised that Gold Fields didn't look to match the offer made by Pan American and Agnico?
I don't know that I can answer that question, to be honest, because I don't know what happens in the internal machinations of a company, what happens in one boardroom or another, what happens with discussions with shareholders. We certainly are aware that some of the shareholders, not all, but some of the shareholders of Gold Fields had expressed reservations about their engagement on this deal and the amount that was being paid to buy our company. So I presume then that in that context, there must have been some discussion about, can we afford to pay something more? What I think is interesting here is that on top of the premium that is implied in our share price as a result of the first deal, we're getting an extra 15% on top of that in this deal. And that's part of what leads to the superior proposal. The other part, of course, is that there's a significant cash component to it. And that cash is something that can't be overlooked in the context of volatile markets, in the context of the volatility that we're seeing even in our industry, in capital markets. I think to offer cash is not subject to the vagaries of one share price or another. It is absolute. Its value is known. But one other thing that I think is important here is not just the premium that was being paid and the underlying value that was in our shares already reflecting a premium being paid from the first deal. It's also that at the time that this deal was presented and then agreed, our share exchange ratio relative to Pan American and to Agnico was at all-time best for Yamana. It had actually improved from the middle of May to present day. So to the time that they announced the deal, it had improved, in the case of Agnico, a full 10%, and almost 40% in the case of Pan American. And if we go to the beginning of the year, our share price had overperformed both Agnico and Pan American to the tune of about 40% for Agnico and over 100% for Pan American. So to say it differently, our shareholders are getting the benefit of shares of companies that even independently of this deal are quality companies, but at all-time low relative to our share price. So all that upside then accrues to our shareholders.
I think this brings us into something we were talking about before we came on air, the gestation time of a deal. And it takes a lot longer to put transactions together than perhaps a lot of people would imagine. But also, once the deal's announced, there's that time to close. And in this specific instance, I mean, as you've just referred to, the share price movements have had a very real impact over the month. But also, the Pan American Agnico offer came after what was the original shareholder meeting date that Goldfields and yourself had set to discuss the Goldfields transaction. So time's a critical factor, isn't it?
Yeah, so whether or not, the conventional view is that if someone is interested in putting in, a competing proposal, the conventional view is one waits until an information circular is available on the first deal, because that creates a time impact. You must act quickly in order to get what could possibly become a better deal agreed and then settled. It is coincident here that they announced their deal, or they presented their deal at the time that our information circular was complete. We'd now announced that we were having shareholder meetings. That certainty was there. And so that creates that compression, that time frame where you have to act, you can force something to happen more quickly. But to your broader question of the gestation time for deals, yes, it's substantially longer than people believe or is assumed. I find it fascinating when we get decks coming from investment bankers, and in some cases those presentations are very good presentations, but in many cases it fails to overlook the complexity of the human dynamic and how long it takes for someone to digest something, what they have to go through in terms of even if it's a chief executive or a chairman, a board of directors, to persuade a management, the amount of diligence that then has to be done, coming to terms with where your share price is trading versus someone else, how much you can afford to pay that is still fair and reasonable to your shareholders and equally fair and reasonable to the other shareholders. And that takes a considerable amount of time, far longer than I think even market participants believe that it takes.
Thank you, Peter. I'd like, if it's possible, for you to sort of take a step outside your position in Yamana and sort of looking at the sector in general. What does this deal mean for the sector? And I'm looking at it from a perspective, it's a big company. Yamana's, let's say, 1 million ounce a year gold producer. You've got two bids. You've got an unsolicited bid. So is this indicating that we're at a certain stage in the market, that perhaps going forward next year we're going to see perhaps a lot more aggressive M&A action?
Well, that's a really good question, and I don't know that I can presume that. I don't know that in answering that, I think that there would be an element of hubris that I could predict what will happen in our market, in our industry more broadly. I would say that this is certainly an example of one where it became very clear to industry participants that our share price was not reflective of full value. And so in that context then, it's understandable that companies would bid to buy the company. Will that exist more broadly? Will that encourage other corporate deals? I would say, if I can try to hold back on the hubris and the presumption, I would say that yes, I see a lot of other opportunities out there where there's undervaluation of one by comparison to another, where there could be synergies created. And so I think that there is the possibility for consolidation. And as you're aware, I've been a proponent of our industry consolidating. It is too fragmented, and our industry consolidating for a long, long time. And we've been a proponent of consolidation, where we've been the buyer of assets and the buyer of other companies. And now we find ourselves on the other side.
Well, just going into that, you built Yamana by piecing together several smaller companies. And it sounds like you still see a lot of value in the marketplace. So, we have a B2 Gold, we have a G2 Goldfields. Are we going to see a Y2 Gold? or is Peter Marrone going to take up golf?
Wow, interesting that you mentioned golf. I've never golfed in my life. I've never picked up a golf club. I don't know the terminology. I don't intend to start golfing now. When I went from the practice of law to investment banking, it was over a weekend. When I went from investment banking into doing this, running this company and taking it public, there was a period where I thought perhaps I'll take it easy for a while, and then this opportunity presented itself, and I thought I should take advantage of the opportunity and hopefully create some value, which I think we've been by and large successful at doing. And so I would say to you that I don't think that I'm picking up a golf club now, and I'm certainly very comfortable saying that I still see a lot of opportunities in our industry. I'm looking forward to taking advantage of those.
That sounds like there's going to be a Y2 Gold at some point in the future. Let's change tack for the sort of final question. What do you think will be the main trends in the gold market and gold equities in 2023?
I think we'll see a stronger gold price. I think we'll begin to gold equities. We talk about gold, but we need to really be focusing on gold equities. I am not in the business of promoting gold price. I'm in the business of promoting our company and the industry, and hopefully getting people to recognize that the share prices of our companies are not reflective of the volatility and the risk that exists in the world, certainly not reflective of even where gold price is trading today. And what I think will happen over the course of this next year, as we come to the conclusion of this year, moving into next year, is that we'll begin to see more and more investors realize that there's safety and certainty in investing in gold equities, and that the gold equities are the better torque than investing in gold as a metal.
Excellent. Well, I look forward to hearing about the next chapter in the Peter Marrone story as and when this deal closes. Peter Marrone, Executive Chair of Yamana Gold, thank you for joining us today.
Thank you very much. Thank you.
And stay tuned to Kitco Mining for more from Mines and Money London.
Kitco Mining's special coverage of Resourcing Tomorrow is brought to you by Discovery Group,